All right, folks, welcome back to another episode of me documenting my day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today's just going to be another market review of me breaking down the trade that I took, the mistake that I made, the lessons I learned, and everything in between. So with that being said, let's get right into it, starting with the daily price action log. So today's Tuesday, June 23rd, 2025. We had a Powell event at 10 o'clock. It was a high impact driver that didn't really do much to the market. The market just sat in like a consolidation. Really unfavorable conditions today, but I'm gonna walk y'all through what I was thinking before 9:30 and why versus what actually happened and how my approach kind of led to the mistake that I made intraday. So you can see I just go from the daily down to the 4 hour, to the 1 hour, to the 15 minute, to the 5 minute, and I just do my higher time frame analysis, top down, and I take the charts, and that gives me what I'm looking for. But I'm gonna explain it over price action because it's much easier. So let's go to daily time frame and zoom out, kind of get the bigger, higher time frame picture. So we can see that on Friday's candle, what did the candle do? It opened here, traded down, cleared out this low, and closed back inside the range, which tells me the market is comfortable where it's at. It's not likely to break lower down out of this consolidation range. It's probably going to do something like this, right? Especially when Monday opens, takes the previous weekly low, and then closes near its high. That is very bullish in my eyes, and that tells me that the market is going to do something like this on the following candle as well. So going into today, my bias was bullish, but the mistake I made was treating the market like it was still in consolidation, even though there was a lot of signals that told me it was likely to leave the consolidation range. I wanted to treat it like it was still in the consolidation range because that's what worked yesterday, which is why I anticipated a retracement back into the range before it did something like this, but it didn't do that. Instead, it just sat near this high and then did that, continued to do that. So if we drop down to the lower time frame, I'll show you what I'm talking about. On a 4 hour, okay, we can see yesterday's range from the 4 hour time frame. Here is yesterday's range. Within all these candles, we open below these lows. Boom, immediately displaced back into the range. We use the new week opening gap as support there. Strong close near its high, and right at the open today, this is the 6 o'clock candle from the Asia session. What do we see? Boom, strong up close candle, closes near its high. And then from there, I'm bullish on the day. But while I'm trying to formulate my bullish bias before 9:30, I'm looking at little things that tell me that this thing could probably see a retracement. And that never happened. Like this, how this candle took that high but closed below it. With this action right here, I wanted to see a retracement into this gap and then see the market do something like this, but it never offered that because I had the 6 o'clock candle close. It took this candle's low, but just closed back inside the range, and you can see the body on that candle, and really the range of that candle is very small. This is where the market was consolidating clearly on the lower time frame. It was just very comfortable where it was at, just sat right near that high and just kept rolling right through it. Now I wanted to see price take out these clean lows right here, drop into this gap, and then do this. But that doesn't happen because we can take this gap right here. You can see that not one body of any of these candles is laid on the midpoint of that gap. They all close in the upper quadrant, which indicates strength. We can see how all the bodies of these candles, they're all small range. They're very wicky, which tells me the market's consolidating. If it's consolidating, is it going to reverse? No, because expansion always follows consolidation. So if the market takes a high like this and doesn't show me any valid market structure indicating that's going to reverse and just sits on that high, not willing to break lower at all, not giving any market structure that it's showing willingness to break lower, it's going to continue higher, obviously. But I was looking for that retracement to clean out these lows and then do something like this. So there's a bit of information that I missed when I annotated my chart this morning. Like I didn't annotate this gap. Had I annotated this gap, well, I would have seen the market as clearly bullish. And I noted this down candle too. Like if we were to go lower, this down candle would have closed near its low aggressively, really overlapping this gap. But it doesn't do that. Instead it trade down and into the gap, but close above it. All these candles indicate a sign of strength because nothing shows me any willingness to break lower. But I was looking for that retracement because as I was formulating my bullish bias, I dropped down to the 15-minute. I want to see a retracement to these lows, right? But I'm thinking, because this is how I like to formulate my approach. I have an approach and I want to hold conviction to that, but I also like to think about what is going to prove my bias wrong? Like, what would happen that would prove my bias wrong? Well, I thought if the market was going to reject this gap, it doesn't need to take this high because this high already took this high. If it rejects this gap, it's also an inversion fair value gap, and then trades lower for these lows, that would probably prove my bias wrong, and we'd see a retracement into this gap. But that's what I wanted to see for the market to trade higher. But when I noted that as something that would probably prove my bias wrong at 9:30, I thought, you know what? That's actually a pretty good sell idea. Why don't I look for that as a sell idea, but at the same time look for something like this as a long idea? And that is where I went wrong in my approach. What I've noticed from all my bad trading days is that I approach the market looking to be a buyer and a seller. My best trading days, I come to the market with conviction in only one side of price. I'm only looking to be a buyer or I'm only looking to be a seller. My bad trading days, I'm looking to be both. So today, I was 50-50 on my approach because I go to the 15-minute time frame. I was bullish on the daily, the 4 hour, and the 1 hour. I come to the 15-minute, and then I'm finally like, okay, you know what? That could actually be a sell idea. So I see the 15-minute, think about what could prove my bias wrong, and now I'm thinking, if this happens, I want to be a seller, but if this happens, I want to be a buyer. If I ever think like that, and I literally said this in my last video too, if I ever think like that, that tells me that I don't have a solid read on price, and I should probably wait for some more information. So because I looked at this as a solid sell idea, I annotate that premium array. And this is also a lesson about how what annotations you have on your chart are going to influence exactly how you're perceiving price. Because if I annotated that 1 hour gap like this, and I drop down to the 15-minute, I can see that all these candles are closing in the upper quadrant of that. So that tells me that it's strong. But if I annotate this premium gap above, I can see that this candle closed below it and this candle closed below it. And that tells me it's weak. I didn't have this on my charts. So if I don't have this on my charts, what am I using to read that the market's strong? There's also this gap right here that I didn't annotate as well. So I'm just missing information entirely on my chart that would have told me that the market was going to do something like this and not have any interest in going down here. But I did have this on my charts because of the idea that I thought would prove my bias wrong. And that's why I was looking for something like this. So if that gap annotated on the 5-minute time frame, get this out of here. So what I like to look for is just simply where the bodies of the candles are closing on the higher time frame, and that tells me if the market is strong, if the market is weak, and what it's likely to do. And then from there, I look for an entry on the 1-minute time frame. So 9:30 candle opens, takes this high, but close much lower than it. It's a sign of weakness in my eyes. The second candle does the same thing. Opens, takes that high, but close lower. So now I'm seeing two drives above a previous high that failed and closed much lower. And the market's not looking very bullish at the open. This candle opens, takes both of these highs, trades, does not hit the consequent encroachment of that gap, which is a sign of weakness, and close lower. So as soon as I see that, I sold short prematurely before I actually had any valid sell entry on the lower time frame. Now when the market's driving higher, higher, and higher and just continuously taking previous highs, I'm noting that below the market, it has not taken any lows. So it's doing the damage above, continuously driving above previous highs, but below it has not taken any sell side. So as it's doing this, and the candles are closing lower like this, that tells me that the market is relatively weak and has the potential to drive forward these lows below once it gives me this information right here, this reaction here. So I go to the 1 minute and I'll drop my execution on the chart today. And there it is. So coming into today, I was a bit confident and that influenced my decision making. We can see on the 5 minute, this is what it looks like, right? Let's go to a 5 minute. Let's go to NQ. Note how each candle is driving above the previous high, but closing lower, right? So that's where we have the high of that candle, but close lower. The high of that candle right there, but close lower. And then finally drove above that high again. So now I'm seeing how many drives? 1, 2, 3 consecutive drives above a previous high without taking sell side liquidity. We do have this little shallow run right here. But the lows below are very, very smooth. So if it's doing the damage above and below it's smooth, That's something that always repeats at 9:30, where the market is typically going to run for that smooth liquidity there, and then probably do the real move of the day. That's just a setup that I've seen happen over and over and over again. So that's what I was looking for at the open with the sell idea that I framed from that 15-minute gap. So it gives me that information right there. It doesn't trade to that and then starts to trade lower. But I took this short before this candle closed. That's how you know I was really, really, really aggressive on that entry. I was really trigger happy and confident in my read on price. Now I know that when I'm selling short here, and this candle leaves this wick, the price can either do one of two things. It can reject this wick, or it can take the high of that wick and then reverse. But because I sold short here, I put my stop above here. I know that I could potentially take that high and then reverse, but my entry was so premature, right? I wanted to see this gap get inversed first. Never happened. And the reversal that I was looking for didn't happen until it did drive above that high and then failed. Now, it never delivered these lows because the S&P took them and the NASDAQ didn't. The NASDAQ stayed relatively stronger. So if I look at the S&P, this setup was actually not bad. No, it wasn't the real move of the day, obviously. It was the Judas swing. But it still wasn't bad. So here's that same setup. This is Monday. I'm way far back. Let's go to Tuesday. Here it is. All right, so here's that same setup on the S&P, and it actually does deliver those equal lows below. So this is what I was looking for. Played out on the S&P, but did not play out on the NASDAQ because it just sat relatively stronger, created that S&T divergence, and then that led to this move right here. But on the NASDAQ, go to my journal today. So number one, my approach was incorrect because I was looking to be a buyer and a seller at the same time. And number two, going into today's session, I felt confident because yesterday I had a session where I took a trade, I took a short, I stopped out, coming back into, but I took a trade, I stopped out, and I was able to come back from that. I put on the second trade, and that ended up playing out basically on the same idea, just when the logic was there, if you watched my previous video. So coming off of that session today, I felt very confident. I said I recall feeling very confident myself, feeling good about the trade that I took yesterday. I remember thinking about how easy it is just to wait and execute on my setup, which it actually is pretty easy if you can control yourself, prevent yourself from making mistakes. And then I asked myself, how did that affect me intraday today? Well, it's probably a factor why I sold short without getting any confirmation first, because I was overconfident. I thought for sure I knew what price was going to do before it did, and I could just go in and sell it. And then how I approached price versus what happened. My approach leaned bullish and bearish. See, that's the mistake. Today I had a bearish idea and a bullish idea, 50-50, noting reasons to go higher and lower, which is not how I should approach price. So I'm just learning through trial and error what my approach to price should be. You know, it's just something that you develop over time. Obviously, I'm not going to get it right now. I would still consider myself a beginner, only 2 years in, almost a year since I first started studying ICT, but I am starting to get down a process that allows me to collect a lot of data and let me learn a lot about myself. Like this new process that I started doing that's automatically a game changer is this. It's just check-ins every 5 to 15 minutes. I like to start with doing 5-minute check-ins so I really know what I'm thinking, like right at the open. And then every 15 minutes, I just ask myself, like, what do I see? What am I thinking? So after 10 o'clock, I see the damage done down here, takes those relatively lows. I see the SMT with the S&P and NASDAQ, and I know that this is likely going to become a high probability order block because it takes the sell side liquidity and it gets overlapped, large down candle, no follow through in that. Said, we see the market violate the open price of that. I know that's likely going to act as support, but I don't even want to take it because look at the conditions. They're just really, really, really sloppy, right? And I know at this point the market's showing literally no willingness at all to break lower. So I know it's going to leave the consolidation range higher, but I just don't even want to trade in these conditions. So by, I think it was 10:30, I actually ended up walking away. 10:30, I don't want to stick around because the conditions are trash. I know that I would probably do something stupid if I hung around just to do something. I would rather get my 10x working on myself off the charts. Typo, off the charts. Caps, off the charts. Typo again. There we go. So at 10:15, I say this thing is not going lower. I can tell it's very comfortable where it's at in the development of higher time frame consolidation. NQ is much stronger than ES, creating the Kraken correlation. It tells me it's likely to stay here and continue to consolidate, then expand higher, or the market is just decoupled today. It'll make a bearish S&T and then trade lower. Those are the two scenarios that I'm running through my head at 10:15. And at this point, it's clear to me this is a consolidation. After consolidation, we have expansion. The market's been bullish. It's likely to go higher. So, the two lessons I learned today. Number one, my approach cannot be 50-50. I have to be submitted to one side of the market, although you do have to be open for flexibility. This was not a bad trade idea. How I executed was bad. It played out on the S&P. It did not play out on the NASDAQ, creating that SMT. It's not a terrible trade idea, but this also teaches me about my trade setup selection. Like my trade setup selection has to be dynamic, revolving around the economic calendar. Like today we had a 10 o'clock red folder. It was a Powell event. So why am I even trading before that event comes out, you know? Like this is how the market is behaving before that event comes out. Even after it came out, it was still pretty shit. Like all this was not even worth trading. I usually study the entire session. I looked at this and I was like, I'm not studying that. So I only studied like this. All little details in here. And I covered that in my daily price action log. Approach, trade setup selection revolving around the economic calendar. Number 3, there's overconfidence. Just really trigger happy because I had a good session yesterday. But also my approach, going back to the approach, 2 lessons about that. Number 1, you can't lean 50-50. You got to be submitted one side. I'm a buyer or I'm a seller, never both. And number 2, each day is independent of each other. Like I shouldn't be trading the market as it's still in consolidation if it's telling me that it's likely to leave the consolidation range because that's what worked yesterday. Today is not dependent on what happened yesterday. It's completely independent. It's a whole new day, new session. Although the underlying sentiment still remains the same, like how today plays out really has nothing to do with yesterday's session. And also noting how what annotations you have on your chart are going to influence your perception of price. Like I had that 15-minute SIBI annotated, but I didn't have any of the bullish gaps below price annotated at all. And that affected my perception of price. So those are the lessons I learned today. There's a trade recap, and I hope you enjoyed it. Thanks for sticking around. Thanks for subscribing. Almost 7 subscribers. And that's it for this one too.